Hey everyone, welcome back. Today we're going to be diving into, well, some really interesting analysis
Okay.
about how this unexpected Trump 2.0 scenario might shake things up. Uh,
In the market.
in the market, exactly.
Yeah.
We're looking at a piece by Alec Young from mapsignals.com.
Okay.
It's called Trump 2.0 Macro Outlook Favors Small and Mid Caps, published on November 18th, 2024.
Interesting. Yeah, it's definitely a fascinating time to be watching the markets.
Right.
The GOP's surprise sweep in the election
For
has
sure.
really thrown a wrench into things.
Totally. The market was already on a roll,
Hmm.
and now the S&P 500 is up a crazy 24% this year.
Wow.
And that's on top of last year's 24.2% gain.
Yeah.
It's crazy.
Yeah.
What's striking
It is.
is Young's argument that this particular situation with Republicans controlling the White House, Senate, and the House could be a game changer,
Yeah.
especially for small and mid-cap stocks.
Right. He calls this a red wave,
Okay.
which essentially means a unified Republican government.
Right.
And historically, these periods have coincided with strong market performance.
Okay.
Young's data shows the S&P 500 averaging a 12.9% annual gain during these red wave periods since 1945.
Okay, so that's interesting.
Yeah,
But color me skeptical.
sure.
Is there something inherently magical about a red wave that makes the market go up?
Right.
Or is there something more nuanced at play here?
That's a great question.
Yeah.
And it's important not to oversimplify things.
Right.
You're right, it's not magic.
Okay.
The idea is that a unified government can
Ah.
sometimes make it easier to pass legislation, particularly when it comes to economic policy.
Sure.
And in this case, the market seems to be betting on a wave of pro-business policies,
Okay.
things like tax cuts and deregulation
Yeah.
that could boost economic growth.
So it's not just about the red wave itself, but what that red wave might actually do in terms of policy.
Exactly.
Yeah.
And we can see evidence of this in the recent surge in long-term interest rates.
Okay.
They've jumped about 19% since early September,
Wow.
even with inflation relatively low at 2.6%.
All right.
This jump suggests investors are anticipating stronger economic growth.
So it's like the market is saying, hey, we see the potential for things to really heat up.
Precisely.
Gotcha.
And this brings us to Young's argument about small and mid-cap stocks.
Okay.
He believes they are particularly well positioned to capitalize on this potential growth surge.
Interesting. But why small and mid-cap specifically?
Right.
Why not just stick with the big established companies in the S&P 500?
Well, there are a few reasons for that.
Okay.
First, small and mid-caps tend to be more cyclical,
Okay.
meaning they're more sensitive to economic upswings and downswings.
So if the economy really does take off, as some are predicting, these companies could see a bigger boost than their larger, more stable counterparts.
That's the idea.
Interesting.
And this cyclical nature is amplified by the sectors they are concentrated in.
Good.
Small and mid caps are more heavily weighted towards sectors like financials, industrials,
Yeah.
and consumer discretionary.
Sure. Which are all directly tied to economic growth.
Right.
We're talking about 52% and 54% for small and mid caps, respectively,
Wow.
compared to just 32% for the S&P 500.
Okay, so you're saying if we see a surge in spending and investment, these sectors, and therefore these smaller companies, are going to be the first ones to feel it.
Exactly. Now, another key difference is that small and mid caps have less exposure to the tech sector,
Okay.
which has dominated the market in recent years.
Right.
While tech is often seen as a safe haven during slow growth periods,
Uh-huh.
it might not benefit as much from a sudden economic boom.
It's almost like they're set up to ride a different wave.
Precisely.
Mm.
A wave driven by more traditional,
Okay.
industrial-focused economic expansion.
Got it.
And that's where Young sees the opportunity.
Okay, I'm starting to see where he's coming from.
Good.
But let's not forget, there's always a flip side to every coin.
Sure.
What are some of the risks investors should be aware of in this scenario? Well, one of the biggest risks is that this Trump 2.0 honeymoon phase fades quickly.
Okay.
And those pro-business policies either don't materialize or don't have the intended effect.
Right, because politics is rarely straightforward.
Right.
And there are always unforeseen events that can throw a wrench in the best laid plans.
Absolutely.
Yeah.
And even if the policies are implemented,
Huh.
there's no guarantee they'll lead to the kind of explosive growth that some are predicting.
Right.
The economy is a complex system,
Right.
and there are a lot of factors at play.
So while this analysis is certainly intriguing,
Yeah.
investors should approach it with a healthy dose of caution. Yeah,
Exactly.
okay.
It's important to weigh the potential rewards against the potential risks
Right.
and to make sure you're comfortable with the level of uncertainty involved.
This is where Young's emphasis on following the flows comes in. Right.
Exactly.
He talks about how institutional investors are moving their money.
Yes,
Can you unpack what that means and why it matters?
absolutely. Following the flows essentially means observing where large institutional investors
Right.
from pension funds, hedge funds, etc.,
Yeah.
are putting their money.
Right.
These investors have access to tons of research and analysis.
Sure.
So they're often ahead of the curve when it comes to spotting market trends.
So if they're moving money into a particular sector or asset class,
Yeah,
it's like a signal flare,
exactly.
a sign that they see potential there.
Exactly.
Yeah.
And what's interesting here is that Young highlights a significant shift in these flows since the election.
Sure.
A whopping 82% of institutional money has flowed into companies with market caps below $50 billion.
Wow.
A clear sign they are betting on small and mid caps.
That's a pretty compelling statistic.
Yes,
It suggests that this isn't just a fringe theory. There's real money backing up this idea.
precisely.
Gotcha.
It adds a layer of credibility to Young's analysis
Yeah.
and suggests that this potential shift in market dynamics is something investors should definitely be paying attention to.
All right, so we've got the stage set.
Right.
A surprise red wave has investors betting on a pro-business boom, and the smart money seems to be flowing into smaller companies.
Uh-huh.
This is where things get interesting, right?
Yes.
What does Young see happening with earnings for small and mid caps in this scenario?
That's exactly where we're headed next.
Okay.
Young argues that the GOP sweep is boosting confidence in 2025 earnings forecasts.
Okay.
And he lays out some pretty eye-catching numbers to support that claim.
Well, don't leave us hanging.
Right.
We'll dive into those earnings projections and what they could mean for investors when we come back after a quick break.
Welcome back. So let's dig into those earnings projections.
Okay.
Young believes the red wave is going to translate into some serious growth for small and mid-cap companies,
Right.
particularly in 2025.
All right, lay it on us.
Okay.
What kind of numbers are we talking about here?
Well, he estimates the S&P Small Cap 600 could see a whopping 24% earnings per share growth in 2025.
Wow, 24%. That's a massive jump.
It is.
What about mid-cap companies?
For the S&P Midcap 400, he's projecting a 17.1% EPS growth in 2025.
Okay, so both significantly higher than the estimated 14.5% growth for the S&P 500.
Exactly. And it really highlights how these smaller companies could benefit
Right.
disproportionately from this potential economic upswing.
But let's back up for a second.
Okay.
Help me understand this connection between a red wave and these rosy earnings projections.
Sure.
It can't just be that Republicans are in charge, right?
Right.
There has to be a logical through line.
You're absolutely right. It's not about party affiliation.
Okay,
It's about the policies that are likely to be enacted.
right.
The market is anticipating a wave of pro-business policies.
Okay.
Think tax cuts, deregulation, and increased infrastructure spending that could create a very favorable environment for businesses to grow and expand.
So it's like a self-fulfilling prophecy.
Yeah.
The market expects these policies, which leads to optimism,
Right.
which then leads to actual growth.
There's definitely an element of that.
Yeah.
Investor sentiment plays a huge role in market movements.
Sure.
And right now, there's a lot of excitement about the potential for a pro-growth agenda to unleash the economy.
And because small and mid caps are more sensitive to these economic shifts,
Yes.
they stand to benefit even more.
Exactly.
So they've got a turbocharger on their growth engine.
That's a great way to put it. And it's not just about the direct impact of these policies.
Okay.
It's also about the broader psychological shift. Remember, before the election, there was a lot of uncertainty and hesitation in the market.
Right.
Investors were nervous about the economic outlook, and that caution was holding back valuations, especially for smaller companies.
So it was like a wait-and-see approach.
Exactly.
Yeah.
But now, with the GOP in control
Right.
and a pro-growth agenda on the horizon,
Yeah.
that caution is fading fast.
Okay.
Investors are more willing to take risks and bet on companies with high growth potential.
That makes sense.
But
But I still have a nagging question. We've been talking a lot about the potential upsides,
Uh-huh.
but what about the potential downsides?
Right.
Are there any red flags investors should be watching out for?
That's a critical question.
Yeah.
And it's essential to approach this situation with a balanced perspective.
For sure.
While there's reason for optimism,
Right.
there are also potential risks that could derail this Trump 2.0 rally.
Okay, hit me with the worst case scenario.
Right.
What could go wrong?
Well, the most obvious risk is that the anticipated policy changes don't materialize
Right.
or don't have the intended effect.
Okay.
Political gridlock is always a possibility,
Yeah.
even with a unified government.
So even if the GOP wants to push through these pro-business policies,
Right.
there's no guarantee they'll be able to get it done quickly or smoothly.
Right. And even if they do,
Okay.
there's always the risk of unintended consequences.
Uh-huh.
Economic policies can have ripple effects that are hard to predict.
Right.
It's like a giant game of chess, where every move has the potential to create a cascade of reactions.
So while it's tempting to get swept up in the excitement,
Sure.
investors need to stay grounded and remember that there's always a degree of uncertainty in the market.
Absolutely.
Got it.
And that's why diversification is so important.
Okay.
Don't put all your eggs in one basket, so to speak.
Right.
Make sure your portfolio is balanced and spread across different asset classes and sectors.
It's like the old adage, don't bet the farm. Wise words for any investor.
Indeed. Now, let's shift gears for a moment
Okay.
and talk about how investors can actually capitalize on this potential opportunity.
Right.
It's one thing to understand the theory,
Right.
but how do you actually translate that into action?
That's the million-dollar question.
Right.
What are some practical takeaways for our listeners who might be
Yeah.
thinking,
Hmm.
okay, this all sounds good, but
Well-
what should I do?
Well, the first step is to take a close look at your current portfolio and assess your exposure to small and mid-cap stocks.
All right.
If you're underweight in this area,
Yeah.
you might want to consider adding some positions.
Makes sense.
Yeah.
But wouldn't that be a bit like chasing the hype?
Uh-huh.
Everyone's talking about small caps now.
Right.
Isn't there a risk of buying in at the top?
That's a valid concern.
Yeah.
And it's important to approach this strategically.
Okay.
Don't just blindly jump into any small or mid-cap stock
Right.
because it's part of a hot sector.
Yeah.
Do your research, look for companies with strong fundamentals,
Okay.
a proven track record,
Ah.
and a clear growth strategy.
So it's about being selective, not just chasing headlines.
Precisely. And remember, you don't have to go all in at once.
Okay.
You can gradually increase your exposure over time
Gotcha.
as you gain more confidence in the market's direction.
It's like dipping your toes in the water before taking the plunge.
Exactly. And another key takeaway is to be patient.
Right.
Market trends can take time to play out,
Yeah.
and it's important to have a long-term perspective.
Yeah.
Don't expect to get rich quick.
Right.
Focus on building a diversified portfolio that aligns with your investment goals and risk tolerance,
Okay.
and then let it grow over time.
That's such an important point. Investing is a marathon, not a sprint.
Well said.
Yeah.
Now, before we wrap up this discussion,
Okay.
I want to circle back to Young's analysis
Uh-huh.
and highlight one more point that I think is particularly relevant for investors.
Okay.
He talks about the importance of understanding the broader economic and political context
Right.
that's shaping these market trends.
Right, because it's not just about isolated events.
Exactly.
It's about understanding the bigger picture.
Yes.
But how can investors actually do that? It seems like a daunting task.
It can be, but it's not impossible.
Okay.
There are plenty of resources available to help investors stay informed and educated.
Okay.
Read financial news, follow industry experts,
Yeah.
and don't be afraid to ask questions. The more you understand about the forces driving the market,
Uh-huh.
the better equipped you'll be to make sound investment decisions.
Knowledge is power, right?
Absolutely. And in the world of investing,
Yeah.
knowledge can mean the difference between success and failure.
This has been a really insightful conversation so far.
Yeah, I think so.
And I'm sure our listeners are eager to hear more about Jung's analysis and its implications.
Right.
But let's take a moment to reflect on what we've learned so far.
Sounds good. It's important to pause and consider the key takeaways before moving on to the next phase of our discussion.
So we've talked about this potential red wave bump for small and mid-cap stocks,
Right.
and even gotten a peek at those impressive 2025 earnings projections.
Yes.
But I think the real question on everyone's mind is,
Yeah.
how does this translate into actual investment decisions?
Right.
What should we as investors
Yeah.
be doing differently?
Well, that's the crux of it, isn't it?
Yeah.
It's one thing to understand the theory, but it's another thing entirely to put that knowledge into practice.
Exactly. So let's get specific.
Okay.
What's your top takeaway for listeners who want to ride this potential wave?
If you're convinced by Young's analysis
Uh-huh.
and see the logic in this red wave scenario,
Yeah.
the most obvious step is to make sure you're not missing out on the small and mid-cap action.
Got it.
Look at your current portfolio.
Okay.
If you're heavily weighted toward large cap stocks,
Right.
especially tech,
Yeah.
you might be missing a big piece of the potential growth story.
Okay, so diversify. Got it.
Right.
But I think there's a fear a lot of people have
Yeah.
that we're already late to the party.
Uh-huh.
Everyone's talking about small caps now.
Sure.
Is it too late to jump in?
That's a smart question.
Yeah.
And it highlights the importance of
All right.
being strategic, not impulsive.
Right.
Yes, there's always a risk of buying high when
Big time.
it becomes popular.
Right.
That's why you can't just blindly buy any small cap stock and assume it'll go up.
So how do we avoid that trap?
Right.
What should investors be looking for when they're researching individual companies in this space?
Think of it like this.
Okay.
You're not just buying a stock.
Uh-huh.
You're buying a piece of a business.
Okay.
So you want to make sure it's a good business.
Right.
Look beyond the hype and dig into the fundamentals.
Yeah.
Does the company have a solid track record of profitability?
Okay.
Do they have a strong management team with a clear vision for growth?
Uh-huh.
Are they in a sector that's likely to benefit from the trends we're discussing?
So it's about being a discerning investor, not just following the herd.
Precisely. And remember,
Yeah.
you don't have to bet the farm.
Right.
Start small, do your research,
Right.
and gradually increase your exposure as you gain more confidence.
Got it. Okay, so that's some practical advice on picking individual stocks.
Right.
But are there any broader market indicators
Yeah.
that listeners can keep an eye on to gauge the strength of this Trump 2.0 trend?
Well, we've already talked about following the flows,
Uh-huh.
which is essentially watching where those big institutional investors are putting their money.
Right.
If that 82% figure, young-sighted, continues to hold,
Yeah.
that's a good sign that the smart money is still bullish on small caps.
Right, because they have access to way more information
Exactly.
than the average investor.
Yes.
So if they're still piling in,
Right.
that gives some credence to the idea
Yeah.
that this isn't just a temporary blip.
Exactly. And beyond that,
Okay.
keep an eye on economic data releases,
Okay.
things like GDP growth,
Uh-huh.
job creation,
Yeah.
consumer spending.
Yeah.
These are all indicators that can give you a sense of
Yeah.
whether the economy is actually heating up as predicted.
So it's a combination of watching the money flow
Right?
and watching the actual economic numbers to see if they're matching the hype.
Precisely. And don't forget the political landscape. Keep tabs on whether those pro-business policies are actually being implemented
Yeah.
and whether they're having the intended effect.
Because it's easy to get caught up in the market euphoria.
It is.
But at the end of the day, it all comes back to what's happening in the real world.
Absolutely. The market is a forward-looking mechanism,
Right.
but it's ultimately driven by real-world events and outcomes.
Okay, so we've covered a lot of ground today.
We have.
We've explored this intriguing analysis
Yes.
about how a Trump 2.0 scenario could create a boom for small and mid-cap stocks.
Right.
We've talked about the potential upsides, the potential risks, and even some practical takeaways for investors.
Absolutely.
As we wrap up,
Okay.
what's the one key message you want listeners to walk away with?
I think the most important thing is to approach this situation
Yeah.
with a balanced perspective.
Right.
Don't get swept up in the hype,
Right.
but don't dismiss the potential opportunity either.
Gotcha.
Do your research, stay informed, and be prepared to adapt your strategy as the situation evolves.
That's such great advice.
I think so.
It's a reminder that investing is a dynamic process,
It is.
and the best investors
Yeah.
are the ones who are constantly learning, adapting,
Right.
and refining their approach.
Couldn't have said it better myself.
Well, on that note,
Okay.
I think it's time to wrap up this deep dive.
Sounds good.
Thanks for joining me on this journey.
Of course.
And thanks to all of you listening out there.
Yes, thank you.
We hope you found this insightful.
I hope so.
And as always, keep learning, keep exploring, and keep investing wisely.